I'm Rick Romano. I'm head of the Global Real Estate Securities Group at PGIM Real Estate. I've been in real estate for over 30 years, and today is one of the most dynamic real estate markets that I've ever seen. There are opportunities that are being generated by reflation, reopening, and a recalibration of technology in the real estate space that we haven't seen before. Historically, inflation has been beneficial to real estate and REIT returns. So when you see periods of inflation going back to the 70s, you've seen REITs do very well relative to bonds, relative to common stocks, and private real estate do well. And the reason for that is many of the leases do have a contractual CPI or inflation escalator built right into the lease. When people think about real estate, they think about the income component, but the good news is that the income grows, that it's not fixed like a bond. And during periods of inflation, you'll see a lot of investment managers, a lot of chief investment officers will move money out of bonds into real estate to get that inflation protection. The other benefit in terms of inflation is that inflation really increases construction costs. And when construction costs go up so much, supply tends to get limited. So when you see limited supply, it's good for existing landlords or owners of real estate because they can increase rents at a higher level until it justifies new supply. And when you think about the labor at the real estate property and wage inflation, generally speaking, most real estate property types are not labor intensive. So if you're worried about wage inflation, a self-storage property type, as an example, typically has 1 or 0 employees. And even an apartment community, with what we've seen in COVID, they're really working, they're using less labor at those apartment communities because they've been able to manage through COVID without having people on site. So it is a huge benefit to be invested in real estate in an inflationary environment.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.